afternoon, everyone. How are you all doing today? Did y'all enjoy your lunch?
Yeah, but when?
My name is Camille Dunbar. I am the accountant manager at GOEA, and today I will be presenting to you a field audit training. The first thing we're going to discuss is what is an audit. An audit is an external review of an agency's financial information. It can be conducted face-to-face at the council, but we can also do them via a desk review. The costs and activities of the subrecipients, what we do is we go out, we monitor those costs and expenditures, because we want to confirm that those expenditures charged to the awards are consistent with the budget, the scope of work, and that they are allowable under the approved contract. So your initial expectation from GOA would be, prior to the audit visit, what we would do is we would send out what we call a letter of engagement. And so when that letter of engagement goes out, it's going to request specific documentation. Normally the auditor will request that information prior to them going out, because that will allow them to start reviewing the information, requesting information prior to them coming out in the field. So the goal is to issue that engagement letter at least 30 days prior to the scheduled field audit visit. And so upon the auditor's arrival, what they would do is they would conduct what we call an entrance conference. The entrance conference are several questions they would go through, and that's basically to help them to find out, how does the agency operate? What functions do we do? How do we do it? And what is the process? So after the entrance conference, what the auditor would do is they would begin the review of the documents. They would have already obtained what their sample are. So when they're requesting that information during the engagement letter period, the information that they would be providing would be the information that they would use to begin their audit process. This is just a list of documentation that's reviewed. We do look at your personnel records. We look at your cash receipts. We look at your cash disbursements. We look at your insurance. We look at payroll. We look at bank reconciliations. We look at petty cash. We look at travel. We look at inventory. We look at contracts, and we look at board minutes as well. And so in the next few slides, I will review each one of these documentation that we're reviewing, so you can get an idea of what we're looking at and what you should be maintaining in your files. When you're looking at the personnel file, we look at the job titles. We look at if there's a completed resume or application on file. We look for documentation to see if you have a authorized pay rate. We look at W-4 forms, I-4, I-9 forms. We look at your the employee information and their signature on, as far as the annual evaluation, the date of the hire, the job description, and if that employee was terminated, when, and was that information documented. And we use our GOEA policy, as you can see. This is where this comes from. So it's not something we just pulling off the top of our head. We're following through with our GOEA policy as well as our accounting guide. And so this information is pulled from the GOEA policy manual and our accounting guide from the chapter 1 of the accounting principles. I do want to say this. I don't want anyone to feel like, oh, when we come out is, ooh, got you. That is not the purpose of an audit. The purpose of the audit is so that we can make sure that you're in line with everything. So just like you have to report to GOEA, GOEA have to report to the federal government, because the federal government wants to know, hey, how are these funds being utilized, and are they utilized for the purpose that was intended? So I know that we haven't gone out in some years. I've heard a few comments about that they hadn't had a field audit visit, but we are in the process, And you can be expecting to receive letters from your assigned program auditor or from one of the program auditors announcing their field audit visit intention.
Can I ask a question real quick? Is the AAA supposed to be not necessarily field auditing, but going out and assessing their,
Normally the AAA do, I don't know how you do your process, some may do it through a desk review where you're looking at this information, but remember, like, we contract with the Council on Aging, but we have the AAA. The AAA also, you contract with those under the multi.
right, so, my basic question is, do I pay specific attention to this when I'm making out my assessment form, or is there an assessment form that GOEA has that the AAA is supposed to use for their providers?
So as far as with the providers, they will still follow those same basic rules, cause you will look at that. You probably have already looked at some of this stuff as far as with their personnel. That may have been something that had come across your desk already. I don't know if every AAA have a schedule where they go out or what y'all process, but you should have some type of tool in place to kind of look at some of the things that are going on as far as financial wise.
Oh, yeah, that's for sure.
So if you have that in place, so if we had a question on it, we would actually ask the multi. They will provide that information. They should be able to provide the information that we are requesting, but at the same time, when the engagement letter go out, it will go out to the multi, but it would also go out to you, so you will be aware when GOEA is coming. And then when they have their entrance conference or their exit conference, you can also be in attendance for that.
So GOEA will come to the parishes that are under a AAA.
They will.
Okay.
They will come. The difference is they may not stay as long because most of that funding flows through the AAA.
Right.
So they will look at the councils under the multi, but they may not stay like, I don't know, a week. Normally when we would go out, it had been a week, but with the multis, it may not be that long. And I'm saying that because I can't give you a specific time frame, because if they go out and if they find something that requires additional attention, and then that may result in them staying longer. But normally, under normal circumstances, the auditors are not at the councils under the multi as long as they will be at the AAA or regular CLA.
Okay.
So when we're looking at those cash receipts, we do look to see if it's coded, if it matches the amount. So if you have your cash receipts, you would have all of your documentation together. So if the auditor is pulling a sample and they may ask, I don't know, about a deposit for $2,000. If you give them that information, you need to make sure you have all of the details attached to it. If it's not attached, they will ask for it. And so at that time, either you could provide it or you can't. Or if there's a reason, if there's something going on, they will document that. But they will request it. So when they go out and if they're finding something that they may be looking at that time and you can't provide it, you will have an opportunity to provide that information to them before they leave. Because if it's something that can be resolved before they leave the council, that will be great. We're not just trying to write something up, but at the same time, you do have to make sure that your information is in alignment with GOEA policies. So when we look at that, as far as revenue, some people have a contract with a CPA or someone that does all of this. They may compare their revenues and their expenditures on a monthly basis. We do look at that. We do look to see if the checks are endorsed upon receipt, if it's stamped for deposit only for the council on aging. We do look to see if that deposit slip is on file for the checks and the cash. And so that helps us to be able to tie everything back. We do want to verify that those cash receipts that's on your bank statement that it is tied back to your cash receipts journal. And so sometimes councils use different names for different things. So if we ask for a particular journal, and you may say, well, that's not what we have this thing. Show us what you have and how you tie it back. Because it should be detailed to enable us to be able to follow your process. Does that make sense? Okay. Next slide. Cash disbursements. When we're looking at cash disbursements, we look to see if you have a purchase authorization. So all of the purchase, they should be authorized in writing, and they should be signed off before. You should make sure that you're holding your expenses correctly, and that those accounts are allowable accounts, that they are within the reasonable and in accordance with GOEA policies. We look at the invoices, the signatures, and we look to see if it is paid timely. There have been occasions where we've gone out and we've looked at cash disbursements, and so we may request documentation, and your cash disbursement journal may show, okay, this check has cleared, it's been paid. But there have been occasions where, when we compare it to the bank statement, it's not on the bank statement. So we want to know, well, where is this check? Because you're telling us that it's cleared. But when we actually pull and look at documentation, there have been times when councils have not had enough funding or money to cover those checks. They've written them out and they've stacked on the desk. So it's not time back. So you can see where the question will come with your cash disbursement. So if you are processing your disbursements, make sure you have everything lined up, that everything ties back. Because if it's not, the auditor will question that. Any questions on cash disbursements? Insurance. We look at insurance, we look to see if you have property insurance, we look to see if you have vehicle insurance, general liability. Some councils have volunteers, we look to see if you have liability for acts of volunteers. We look to see if you have the fidelity bond, and we look at these because, and when we review this information, it should outline what the policy limits are, the effective dates, and the company name. We look at all of that information. When you do your budget, that information is normally detailed in there. Some people lump all of their insurance together. They may just say insurance. But when we go out, we do ask for that insurance cover page that details the type of insurance you have, what those policy limits are, and the company that you're with. We do verify that. Because if it's in your budget, if insurance is in your budget, we do look to see that that's covered.
So y'all don't require cyber insurance?
I'm sorry, I didn't hear you.
Y'all don't require cyber insurance?
What type?
Cyber.
Cybersecurity.
Oh, no, some people have computer insurance. Now, if you have it, that's not something we require. That's a choice on the agency. But that's not one of the required insurance that's listed in our GOEA.
Does anybody know if that's required by the legislative auditor? Because my auditor told me 3 years ago I had to start carrying it.
Yes.
We have what, cyber insurance?
Yes.
Why do you not?
Well, what's the purpose of it? Like if it's for scams or something?
If we lose our information, we have the money to get it back.
Okay, so that's the individual choice. It sounds good, but that wasn't one of the required ones. But like, there are a lot of scams out there that's going on. If your agency can afford that, then yes. But we really look at to see, like, if you had directors and officers insurance, you had fraud insurance, those were the major types of insurance. Of course, vehicle insurance as well.
We might be able to tie that cyber insurance or, but who knows?
So I've never heard of cyber,
Really?
I've never heard of councils having cyber insurance.
Okay.
I've never seen it, in the budgets that I've reviewed so far, I haven't seen cyber. So how many of you all have cyber insurance?
You really should recommend
Okay,
it.
so we can't make you get it, but if you looking at your agency and you feel that that's something that you can benefit from, and you have the funds, and from what you are saying, that's a needed insurance, then by all means,
Well,
we recommend, but we don't say, oh, you have to have cyber insurance. That's not what we do.
The legislative auditors that we all got hit with recently, okay, they recommended it, and so when we went to our insurance carrier, one of our general policies, we could attach it onto that policy, cause they had cyber. So it wasn't that costly. So
It
we-
wasn't, it's not
Okay.
expensive.
So again, like she said, it's recommended, but again, that's not something that GOEA, requires, but it is recommended.
It also protects us if some of the private information that we collect, that we have
Right.
to, for Sam's program, whatever,
Right.
that if it gets hacked into, that protects us against any liability.
Right.
And so they would cover like, how they would.
They'll cover your ransom.
Like Transamerica, Experian, and they give them all that,
Yeah, like what
for
happened
a
to
year
MGM.
for protection. Okay. So again, recommended, but it's not something we require, but it is something that if the legislative auditor recommends it, by all means, yeah, by all means. So payroll, we look at your payroll, we look at your time sheets, we look at, to see, we do go back and compare, if your leave is, compatible. So if you have an employee and you said that employee took leave, I don't know, I'll just say 3 months of leave. If you say that they've taken that amount of leave, then we do go back to compare those leave slips to see that that person did take leave on those days and that it was deducted. You should have some type of record where you keep up with, if your council is set up and your employees earn leave, they earn sick leave, they earn PTO, whatever type of leave, you should have something where it keeps a running balance, to tie that back in. Okay. We look at too to see if they're coded in one program. You know how you have your budget and you may have an employee that's, worked 50% in C1, 50% C2. That's how you code it. But sometimes during the year, it may be, this is not how it should be. And you may make some changes, but initially, you may have coded it as C1, C2. We do look to see how's that coded. Is it coded the way that, you budgeted it? We look to see if the payroll checks are based on the approved timesheet, if they are keyed to your system. Again, some people, some councils, they hire, a CPA, or they may have, one time they used to have a firm called ABP, where they would actually do the payroll, but if you're doing it yourself, then you should have some type of, payroll journal or something where we can go back and we can tie that information back to validate that what was reported is what was keyed and that is what they're paid for. We also look at a sample now. When we go out, I also need you to be reminded that, it's not 100%. We're not reviewing every transaction. We pull a random sample. So that means there may be some things that we may not catch, but you may catch it before us. And if you do, some things should be documented. So as an example, when we pull a sample of payroll, and then we look at those names, because we will ask for all of the employees that's listed. So when we get that list from you, and we're looking at your payroll, and then I look at your payroll, and I see Sherry name is on there as a payroll check. Well, that's gonna be a red flag, because you just sent me a list, and you gave me a list of all your employees, and Sherry's name wasn't on there. So please be mindful when you're looking at your information that, if it's something on there that should have been purged, that it don't show up on that sheet, and we pick it up as an incident that should not be on there. Okay? Any questions about payroll?
Doctor suggested that payroll checks should go out 2 days after.
So when we look at the payroll check, some have a delay. I don't know what y'all's delay is. Do y'all have a 2 to 5 day delay? That's how it was. Now, whether that has changed, but it's normally a 2 to 5 day after the payroll check ended. Those checks should not be, the day the payroll end, that they get paid that same day.
Yep.
So it should
They
not
will,
be like
and I can testify,
3 days later.
for the last 10 years or whatever, they will write you up if you do not do it that way.
Well, wait a minute, well, who's gonna write you up? Cause we don't do that.
Yeah,
We've
yeah,
never
but
been-
they-
They're gonna write you up for what now? If you've done
If
what?
you don't, they have to do that.
Yeah, you should have a minimum of 2 days, a minimum 2 day delay. Like with us, our payroll ended Friday, and we just certified it Monday, but we don't get paid until Friday. So you should have a, so that's what's happening now. But it's not the same day. Does that make sense? Okay, it's a question of audit. This is something that is very important. Payroll taxes. Please make sure that your payroll taxes are paid timely, on time. There have been incidents where there are councils, that may be behind with their payroll taxes, and that is not a good thing. Why? Because if things get so behind, the IRS comes back, and then we go back to this, the insurance, where as far as the board. Because sometimes the board, they will come back, and I've seen it happen, where a council is so behind, they haven't paid their payroll taxes or their withholding taxes. And what the IRS does, guess what? They send that letter to the board. So you should be reminded that your payroll taxes are required to be, paid.
It's going by itself.
Penalties are incredible, y'all, I'm telling you, they're incredible.
And we talked about the leave, that, if they take leave, you should have something where you are, keeping a record of how much leave that employee had. Go down. Down again. Okay, bank reconciliations. Bank reconciliation should be done monthly, not quarterly, monthly, because you want to know exactly what do you have, what issues, do you have. So we do look at that. We look to see if the bank reconciliations are done timely. We also look to see, do someone review and sign off. Now, I do understand some agencies are small, so you may run into an issue with the segregation of duties. I have seen that. But sometimes you can pull someone from the board just to review it. I don't know what your process is, but I do know that, with bank reconciliation, someone should be reviewing. We should be having, your beginning balance, your list of outstanding checks and deposits, whatever your bank adjustments are, all of that information should be reflected on there. And after the bank reconciliation has been completed, the person who prepared the bank reconciliation should sign and date it. Afterwards, it should be reviewed by the supervisor or someone, they should sign and date it, that the document is approved. Unclaimed property, I don't know if any of you have ran into that issue, but, if you have had checks and someone has not claimed it, you should report that information. First of all, your check should, have a date on it. Some may say void after 6 months, some may say void after 90 days, but it should have some type of sale date on it. So you should check your records, so if you have written a check to someone and they haven't claimed it in 6 months or so after your sale date, you need to, make sure that information is reported appropriately to the, unclaimed property section, which is the part of the Louisiana State Board. Travel, all your travel, it should be approved in advance. Travel authorization, it should include your expense code. So when we go out, we do look at your travel. We look to see what was the purpose of the travel. And if you have it, the easiest thing to do is if a person is traveling, keep all of that information together, so if, if Miss Joyce was traveling, she'll have her travel authorization, but she'll also have like her hotel and all this, cause we're looking at the expenses, what was reimbursed, and so we look at that information, and, some councils have a policy, a travel policy for certain things. Most councils, we recommend following PPM 49. I don't know if you all have certain policies in place for your travel where you may be using local funds for something additional, but as far as with the GOEA fund, we do recommend PPM 49. And you do know that that has changed. We have PPM 49, but we also have that GSA amount. And I did put that on there, but even if you Google it, if you Google PPM 49, it's gonna pop up with the PPM 49 guide, but it's also gonna include that GSA per diem rate in there as well.
Is it still where the, like we pay, our board has approved us to pay federal rate for our travel, for our.
And that's what GSA is, it is the federal rate.
Now,
Yeah.
probably now, but it wasn't before.
It's been in effect for a few years, so I know it's been a while since GOEA went out, so I don't know.
GOEA's is not like 3 cents difference than the other, than the federal rate now, because the federal rate.
Not for, it's the same rate when I'm saying mileage, it's the same as the federal.
Okay,
Yeah.
I'll check that out when I get back to the office, make sure that we're doing that right, but anyway, we, and my question's probably null and void, but if we pay the federal rate and the state rate are different, and we're following that, the state guide or whatever, then do we take and pay the state rate to the program, and then whatever the difference is, like the.
If you had a
whatever
difference,
to
you would
local-
charge that to your local.
Local,
Yeah,
okay.
you can do that.
Okay.
Alright, inventory. We look at your inventory. There are just, everyone do their inventory different. You can either do it, perpetual. When you do it perpetual, that means that you keeping up with everything on a daily basis. You know, someone takes a pack of ink pens, you keeping up with all that on a daily basis. When you do it in a periodic review, then you may do it every 3 months or so, but you definitely do it at the end of the year. So there are just two different ways that you can manage and keep up with your inventory. When we come out, we look into see, GOEA requires that you send an annual inventory. So that is a given. And we require that because once we get the CPA audit report, we actually take that inventory and we compare it to what's in your CPA audit report. It should tie back. Most of the time, the CPA, they take this information and they keep up. We're looking at the GOEA inventory. So when we come out, we look to see if you are keeping up with your inventory. We may check something, you may send an inventory in and we have that inventory and we've approved it. We may take it and look at it where you may have deleted some items. So we want to see, okay, did you delete it? So don't be surprised if the auditor asks, if you had some inventory on your list that you removed, they may ask to see documentation to support that. But we also look to see that you tagged it, and all. And this is nothing new. This is in accordance with a GOEA policy.
And these are things that are purchased with the GOEA money, not like with a local or
No,
grant?
we're looking at GOEA.
Gotcha.
Yeah, GOEA. Those are the funds that we're looking at. Can you go back one more time? So we also look at it too because, if you have capital outlay, you know, sometimes people purchase ceilings, buy items and all. We do look to see if that information is, approved in the audit. We also look to see where the location is. So, some councils have different places where they may house different items, or you may have a meal site or several meal sites, and they may check off something and they want to confirm that this is where that item is. So if they come out and they ask for you to show them that item that they select as a sample on there, then you would just need to show them where it is and if it's maintained. Any questions on inventory?
What is the minimum value that's allowed on that?
We asked, it was $1,000 or more. Anything that's $1,000 or more.
After you
So,
put on the inventory.
it should be, tagged in inventory.
And that, at one time, you had to tag any computer type stuff, whether it was 500 or 1,000.
So sometimes councils will buy the inventory, they may purchase a computer, but you may buy it as a set. So you may not have just bought one thing. We do look at it to see if it was purchased as a set, then it's not $250, cause you bought it all together. So,
So if the set gets to $1,000.
right, if it's $1,000 and a useful life of more than 1 year, it must be visually tagged. So it should be tagged in inventory.
The director had asked that we start tagging items, even though it's less than 1,000, without number and logo, so we'd not, so theft would kind of be prevented, so we wouldn't have somebody trying to walk out the door with stuff. Is that okay to have?
You said if it's less than 1,000?
Yeah, just mark it as property of the council, and there is a number. But
Yeah,
it's
you
not
don't
on
have to,
there.
we're only asking if it's $1,000 or more,
Okay.
that it should be visually tagged in inventory.
Yeah.
Now, when you do your complete inventory, it should be on there, you know, because it may be more than one. Let's just say you bought, I don't know, two computers, 2 laptops. You could have gotten them on sale for $500, but you bought them at the same time. But it's $1,000. You would keep that on there. In those cases where you're dealing with the equipment, I would recommend that you tag it, you know, because it's a computer. So you don't want to run the risk of someone just saying, well, it's not tagged, I just, you know, I can take this with me, you know. So in those cases, I would recommend that you keep it on your inventory.
Yeah, we just
You
have
know,
to.
keep it on your inventory. But if it's less than 1,000, I still keep it on your inventory, because that still could be one that they select to look at.
Okay,
But
now,
you will have your documentation showing, well, I ain't have to tag it because it was less
now,
than
the one we
$1,000.
submit, the inventory report we submit to you, we wouldn't include it on that, right? We'll just do everything over 1,000, cause that's what y'all
So-
concerned about.
Let's just say you didn't include it on there. And then we get your CPA audit report, and those numbers don't tie back. Then we questioning, well, why don't these numbers tie back? So I would recommend that if it's on there, include it. What I'm saying is, if it's, less than $1,000, you don't have to tag it. But if it's inventory and you used it with GOEA funds, you still should have it on there, because you run the risk of it not tying back to the, tying back to the.
Better to have it,
Okay.
I mean, to the
than need
inventory.
it not have
Okay, I wanna understand.
it tagged.
We have what we call accountability items that we will tag just so that we'll be aware, what we call hot items that will walk away, like emails, like laptops and things of that nature. But we don't put that in with our inventory.
Regular inventory,
We
you
keep
gotta-
$1,000 and above stuff.
So you keep that separate, but then you keep another one that's in-house?
Considered accountability items and then our true inventory.
Okay, so which one ties back to your CPA audit report? Cause that's the one that we're going to use. That's the report, that's the inventory we're going to use to take our ransom salaries.
Yes, yeah, we gotta do inventory.
If it's not on your inventory, then we're not pulling a separate inventory. We're looking at what you sent
And
in
to
to
me,
GOEA.
it wouldn't really be interested in our accountability items. I was putting that.
So when it's accountability, what type of items are they?
Adding machines.
Adding machine, it could be a laptop, but under 1,000, let me say this, a laptop, it may be a carry case, but under $1,000.
So those kind of like your, cause we have things that we call, what is it, blue blue tags, we call it blue tags, it's less than, but we still are, the person that's the equipment manager, they're still responsible
Right,
for
because
going
we
through
wanna
the check.
know what we have, even though it doesn't meet the threshold, those items are important to us. And like I said, those items that we have a concern that someone would walk away, and we wanna have all that information right at hand to be able to pull the serial number, whatever.
So you have that as a separate one. What I'm telling you is, I'm not looking at your accountability inventory. I'm looking at what you sent in to GOEA. Some councils, what they do is, they include everything on there, the accountability items and everything. It's not a separate,
And then the inventory figures don't tie.
no, there's due tie. It would tie. So some people include it all,
I got you.
and then some people, that's the one that we use. We look at the one, because this is what you telling us your inventory is. So we're taking what you sent us, and we're comparing that to that individual, CPA audit report. That's what should tie back.
So the bottom line, the rule is, if it's 1,000 or more, we have to, but we
You
can't
have to.
list stuff that's less than.
Right, you can list things that are less. But if it's $1,000 or more, it has to be visibly tagged.
But you know, those in-house inventories could be important if you had a fire or something.
For insurance.
Yeah,
So,
they're important.
that's what I'm saying, some people show it all. I don't know how your CPA is doing it, but I understand what you're saying, some things are accountable. But when we look at the inventory, most people, they do show it all on there. And sometimes it's a lot, you know, it's a lot, because they may have some items that's only $250. Now, at one time, it used to be $250, but then they increased it to $1,000 or more. So, I would recommend that you keep all your inventory. I can't tell you what to do. All I know is that when we're looking at it, we're looking to see if that information is tied back to be compared, to see if it compares back to the
This
CPA audit
presentation's in your
report.
booklet.
Any other questions
We're taking- it's in your
on
booklet.
inventory? Mr. Johnny?
One question, on the movable property with a value of 5,000 or more, says may not be disposed of without prior written approval.
So, we have a rule in our policy, and that rule states that if you are getting rid of property and it has a value of 5,000 or more, you should let GOEA know that, hey, I use 3E funds in the amount of $8,000 and I purchased and I want to get rid of it. So you would send that information to us, and then we will provide you with disposition instructions. And normally those instructions are, you know, whatever you sell it for and you receive the funds, those funds should go back to that program that you took it out of. So if you use 3E funds, then you should put that funding back into that program.
Well, my question is that the net book value of the item or the original purchase price of the item?
So it's going to be whatever you sold it for. You may not get that net book value. You know what I'm saying? You may not get it, cause some people may not be willing to.
Like
But
when you get rid of your vehicle,
I'm sorry, I didn't hear you.
when you get rid of vehicles, I mean, you may not get but $1,000.
Right, and most of the time, even with those vehicles, a lot of times that's through DOTD. You know, so we don't look at those, per se, if it's, cause that's not GOEA funds. Now, if it was GOEA funds, you know, like, it could have been, PCOA, you could have used PCOA, cause those are discretionary funds. And you could have used that as part of your, purchase price.
Okay.
Then, but those are PCOA funds. You just make sure you keep all your documentation, and then you just code that back to whatever, fund that you take. Does that answer your question? All right, contracts. Contracts We're not talking about GOEA contracts, we're talking about, contracts that you may engage in with someone at the council. You may have a nutrition contract or what have you. In those contracts, you should be detailed about what it's about, the effective date, you know, just have your pertinent information in there. We do look at that, of course, your contract should go before the board, it should be reviewed and approved by the board, and, just like you do with your budget, where you have an annual, you send your budget in and you have someone that's signing off on that resolution, we do look at that. We make sure that it's signed off on, and that it's maintained, in your file. Board minutes. So I know you probably look at, even with HBCS, they do look at board minutes out. Sometimes we kind of overlap, but we're looking at different things, okay? They handle in the services side, we're looking at, from the financial side. So when we look at it, we're looking to see, hey, if I run across something and I see that you have a contract with someone and you're sending out payments of $1,500 a month, I'm seeing these payments constantly go out. I do want to see, did the board approve this? Is it documented in the minutes? You know, if you decided to give, get a payroll increase, did the board approve this? Is it documented in the minutes for the director or what have you? I do look at that. We do look to see if it's non-routine travel, that it is documented in the minutes, and we do look to see if it's certified
You should have put that in.
by the secretary of the board.
What's non-routine travel?
So, non-routine, most of the time, directors don't travel every day.
If I go to Hawaii, that's
So-
a problem.
That would be a problem.
I mean, that's not like our quarterly Dakota meeting.
So, non-routine would be like this
The Wells
conference. You don't go to a GOEA conference every year. In fact, we hadn't had one in a minute. So this would be considered non-routine. It's not part of your job. If you are a C2 driver, C2, that's routine. You know, you doing this every day. But for directors, most of the time, your travel will be non-routine. You're not traveling, every day. Does that answer your question, ma'am? Does that answer your question? Does that answer your question?
It does.
All right.
Thank you.
All right, so, now we get to the Secretary of State. The Secretary of State, can I get everybody's attention, cause I feel like nobody's listening right now.
I'm listening.
I am.
Okay, all right. Cause as the teachers used to say, we can all sing together, but we can't all talk together, okay? So I really need your attention, and if this is not someplace you want to be, then you know you can exit, okay? All right, so what was your question?
That's on the previous.
You wanna go back to where we were?
Yes, ma'am.
Okay.
Authorization of promotion and salary increases. I've always had in the minutes for myself, but do the director, she can give raises, or he or she can give raises and just notify the board.
Right, so normally they would put that in there, if it increases. Yeah, so that's normally documented in your board. For the most part, the things that's on here, that's normally, that's routine, that's common.
Yeah.
So it should be in your board minutes. What I was trying to do was kind of outline some things so you can actually see it, you know? And so, we do look at that. We do look to see, like sometimes you may bid, we have bid laws and, did you bid, you know, we have the state bid laws, it should be in compliance with that. And so some things really should be just documented. Any other questions before I go to the next?
I do. So this right here says, in the minutes, document, like authorized check signature.
So,
And then that's certified by their secretary. But then what also needs a resolution? Cause if it's in the minutes and it's documented, you also need a resolution that then says, these are our, I mean, what constitutes a need for a resolution? Cause they approve minutes, but doesn't need a resolution, so what needs resolution?
you saying, is it two different things?
Well, I mean, you're saying here, y'all are gonna look at if it's documented in the minutes and it's certified, but then you also have resolutions, so what constitutes the need for a resolution just versus it's in the minutes and it's
So
approved?
most of the time, even though they have a resolution when you have your board meetings and all, it's done twice. It's normally in both places. You have your resolution, but they also document it in their board minute. The reason why in the board minutes is, if you just, let's just say it's a resolution and it's just signed off on, but we don't know if the entire board actually was there to hear everything. So for us, this is documentation to show that just because whoever signed cause sometimes the president, signs the resolution. But the board minutes is telling me that, hey, this was brought before the board and it is documented in our minutes.
See, I thought the minutes, kinda like that chicken and the egg, I thought the minutes came first and then a resolution came from within your minutes.
It should, but you would be surprised. So this is why we spell it out.
I got you.
So there would not be, no confusion about it, but it should be. That's the way it should go, but
Minutes
what
versus
we have
resolution.
experience is,
Okay.
that was not the case, where you've had the resolution, but it was not in the minutes. So it should go before the board, documented in the minutes, you have your resolution, so we do look at that, because that's because we've had issues with that.
Good question.
Whereas a person could have a person could have a board president come in and sign a resolution.
Right.
But unless you see it as an agenda item for
It's-
that, and then the action taken.
It
So
should
you
be-
wanna see the complete.
Right, the
list.
complete step.
Is it doing it again?
I'm just like, I don't know. I don't know why you called me over here, sis.
Secretary of State, as you all aware, Secretary of State, you're required to complete an annual report. At one time, it used to be $5, I think it's what, $15 now? Okay, so, this is important because if you are not in good standing with the, Secretary of State, they will not allow you to go into contract. So we've had a couple of counselors whose contract was held up because, and even if GOEA miss it, when it goes to state contract, they catch it. And so we've had some contracts held up because they were not in good standing, with Secretary of State.
Now, do you know my unit does that?
And we look at it too,
Kayla checks that every quarter.
yeah.
It's
So-
not every month, I forget which one she does now, I think it's every month she checks.
And she sends a reminder.
She does send reminders.
So we do
That's
look at that, to make sure that you're up, you're up to date on that, that is important. Because they will not, and I've seen it, so this is why I'm saying, please make sure, I had, a council this year, their contract was held up because they were not in good standing. So that means that some things are beyond GOEA control. We can tell you, but if it goes through, you go through the process and you fill out your contracts and all, and it does not get
Swear,
signed.
I'm not touching this thing.
She's
I
ready
am
to
not
go.
touching
She's
it.
asked questions.
But that's okay, go on.
No, it's done. I'm like, this is the I cannot control the mouse. Look, it is doing it by itself. I'm serious, look. You see, I'm not joking.
I thought she was having some technical difficulty.
No, it is doing its own
She
thing.
was trying to get the rest of us out of trouble for.
Okay,
Must be on one time.
so, did anyone have any questions about the Secretary of State? No. All right, I think this is the last, but, so, after the on-site audit has been completed, who's in here has been through a audit?
Me, but it's been a while.
Okay, so you've experienced the exit conference where they On the board,
Is
your
there
findings.
their board of directors? and
Yes.
Yeah.
You out in public and.
I feel like I'm in a courtroom when I go to these exit conferences, cause sometimes it's so many people. So, with the exit conference, though, what we would do is we do invite the board president, because the board president should be there. You know? But sometimes the board president, they bring the whole crew. And so, of course, the director's gonna be there. And so, we would address the findings. Now, sometimes, you know, once we get to the exit conference, sometimes it may not always be a finding. Sometimes it could be just a reminder, that we may not write it up as a finding. Just as you all don't want findings, we don't want to write them up, you know. And so, but if it is something that, let's just say you can correct it, it's like, hey, well, I didn't know this is what you meant, then what information did I need to provide? And if you provide it, at that exit conference, once they issue their, the audit report, they will indicate that in there, that the information was provided at the exit conference and the issue has been, you know, has been resolved. So, we do ask that, once we issue those findings, that you respond within 14 days after the exit conference. Not business days, 14 days. So, if something was to come up and you say, hey, I can't make that 14 days, you know, can you give me a day or so? Then we can work with that. But if you just don't respond and we don't hear anything, then we're gonna issue the audit report without your response in it. So if you want your responses to be heard or received, please respond to that, to the audit, to the exit conference within 14 days.
Where does that go?
Huh?
Where does that response and all that go?
So it goes to you, it goes to the board, it's maintained in our file, the legislative auditors come, they do the CPA audit reports. When we get the CPA audit reports, we compare the findings to what's in the CPA audit report. Sometimes the CPA auditor, the CPA will request a copy of that report. It's a public document, so if they request it, sometimes they would use it. And it's like, okay, well, hey, y'all have an issue with this, so we need to address it. And so not only will we have it as a finding in our report, now it's a finding in the CPA audit report as well.
Shirley's gotta be terribly serious right now.
So, no, it just depends.